Hello, thanks for tuning into this episode. Before we start, FinTech Focus TV is brought to you by Harrington Starr, global leaders in financial technology recruitment. Head to the Harrington Starr website and check the links below so you can download the latest copy of the Financial Technologist magazine. And also, we've got the TradFi and DeFi Era of Convergence documentary coming up. If you're interested in the merger of the two, please get in touch. Thanks a lot and enjoy the show. Hello and welcome to our episode of FinTech Focus TV with me, Toby Babb. Today I am absolutely delighted to introduce you to Paul O'Brien from Glimpse Markets. Paul, how are you?
Doing good, Toby. Thanks for having me.
Listen, great to have you on the show. I've reached out to you because I've just been seeing some really exciting stuff that you've been doing of late, and I know you've been working on Glimpse since the summer of 2020. We've seen a fair amount happen over the markets over the last couple of years. And over the last couple of weeks, I know everything's gone live. So we're going to come into all of that. We're going to unpack the business, what you're doing, the problems you're solving. It's a really interesting space. So I'm quite excited about this one, I've got to tell you. But before we get into all of that, Paul, tell us a little bit about yourself and introduce us to Glimpse Markets, if you would.
Sure. So my background is I've been in the industry for about 10 years now, focused entirely during that time on the fixed income e-trading market, primarily from a product management perspective. Before starting Glimpse, I was at the London Stock Exchange for about 5 years, where I was effectively helping design their buy-side bond trading platform. So that's my personal background. And then the company.
Sorry to push across. I'm always fascinated about this. I think there is a ever-growing tribe of founders who've come through that product management background, and I think as a career, it's a wonderful career to move in, to move into, to allow you to have that sort of look at a problem, see what's happening out there in the marketplace, and bring that to life. I think it gives a unique sort of vision of what's happening in the market and how you can build a company from it. Did you find that sort of product management background really helped you in what you've been doing over the last couple of years?
Yeah, for sure. I think the appeal to me about going down a product management route is that it gives you a sufficient amount of client exposure that you're comfortable pitching ideas and chatting with traders and portfolio managers, but also it gives you a good grounding in the technology side of things as well. So you can back up those conversations with some technical knowledge. So for me, it gave the best of both worlds, and especially when you're a startup founder and you have to wear multiple hats and do a little bit of everything from cold calling and pitching to testing and helping out, spec out the technical workflows. Having that product management background was certainly invaluable for sure.
Yeah. And it goes back to something I was talking, and we'll come on to this in a minute because I want you to introduce Glimpse as well. But I think when you talk about your last 2 years and the patience and structure you've put into doing it, it's a classic sort of product management play. As you talk about that background as to how you built the company, that I think is really responsible. I think there's so many founders that go into it trying to sell too early, trying to go to market with a product that's not set for market, that creates so many different problems further down the line. I think actually everything you've just said there ties into what you've just told me beforehand about that. So let's go into Glimpse. Talk to us about why you started it. Talk to us about the last couple of years and where we are today.
Well, I think the best place to start is that Glimpse has been founded to address two major problems and long-standing problems in the industry, and that is lack of transparency in the bond market and astronomically high market data costs. So those are the problems we're trying to solve. And as I mentioned, these are long-standing issues in the industry. And from my perspective, it already grew out of a number of conversations I was having with a group of buy side over the past few years, when I was at the LSE and at a number of industry conferences that I attended. And they would just constantly reiterate to me, the problems around market transparency, the problems they were having in terms of data costs and gaining access to even just the most basic of data sets to help them trade effectively, demonstrate best execution, et cetera, et cetera. So the problems were very clear, and I think will be, very clear and, easily recognizable by your audience. The solution, is slightly different. Our platform revolves around helping the buy side share execution data with one another on a give to get basis. And actually the idea of the buy side coming together and voluntarily sharing data with their peers and their competitors has actually been floating around in the industry for probably 2 years before I started Glimpse. It's been referenced in the public domain in a couple of articles. It's been discussed in a couple of buy-side industry panels. So it's been floating around, like I said, for a couple of years. And I felt there was a gap in the market for somebody to try and, make that idea a reality. So I informally sort of got together with a group of buy-side, pitched this idea, and there was clearly some interest in it. So that was enough for me to sort of take it to the next level, try and raise a bit of funding and bring this to market. And I think, you mentioned earlier, Toby, about the product management background. I think I'm naturally quite a risk averse person, so it was important for me before actually quitting my job and starting a new company that I would have a reasonably high level of confidence that there was demand for something like this, and that it would be compelling enough for buy side to sign contracts and support this initiative publicly, which thankfully there was.
That's thankfully there was is always a good line for a founder, isn't it? Within that, but it is a big move, right? And it's as you say, it's to be naturally conservative, and to go into it, you have to be behind it. Look, I'm very similar. It's I'm not a massive risk taker in any part of my life. But when you go into it and you recognise that there is an opportunity, and you back that opportunity with your background to be able to deliver into it, that's a really important aspect. And as I said, my issue with fintech founders is so often a sort of hubris around solving a problem that doesn't need to be solved. And I think you are in this perfect storm, for want of a better phrase at the moment, of buy sides actually yearning for technology innovation. I've said this a couple of times recently that I think the buy side has probably been one of the last bastions of probably slightly ahead of the insurance sector of embracing technology, and really looking for it to be a solution. And I think actually we've seen this sort of like past 5 years of a real embrace from buy side organizations to really look at efficiency and optimization through tech. And when we're looking at these issues you were talking about, what I love about what we spoke about beforehand is what you've been doing for the last 2 years, and the round tables effectively with those buy sides that you're talking about, and saying, like, let's really flesh out the issue here and make sure it's something that needs to be solved. Tell me a little bit about how they viewed the problem. As you say, look, there's been stuff that's floated around for a while. When things float around for a while, sometimes it can be just because it's an acceptable problem to have, as opposed to it's a necessary evil, as opposed to something which really needs to be squashed. What have they told you about why this needs to come to market, and giving the confidence as a conservative guy to really push further forward and make this happen?
Yeah, I mean, we've been, as you said, really encouraged by the buy side and their desire to move an initiative like this and some of the other initiatives in the industry forward. So we've found those market participants, particularly supportive of startups and doing something different. So that's been great. I think taking a step back, when ultimately we're asking the buy side to share sensitive trading data with us, that's a new concept for the buy side, and questions need to be answered around information security, there's legal questions, compliance questions, etc. So it was very important for us that prior to actually sort of going with a contract to a legal person on the buy side or a compliance team, and we really had answers already lined up for every single question that could potentially come up. And that's where the roundtable discussions were just invaluable. So over the course of the last year or so, we ran, I think, about half a dozen roundtables. We had somewhere in the region of 35 to 40 asset managers involved in each of those discussions. So again, that sort of gave us a level of confidence that the proposal had been comprehensively stress tested by a group of very demanding and detail orientated participants before we actually got to the launch date. So everything from, you know, what data fields are we collecting to ensure that the underlying data set was useful for the execution traders and the portfolio managers. What were the commercials around the platform? You know, the buy side, or especially the real money buy side, who are our client base, don't necessarily have the deep pockets that, let's say, the hedge fund community might have. So the commercials needed to make sense. The topic of, you know, data ownership and using your data, getting paid for the data you're generating. You know, what are the rules around data distribution? You know, what data needs to be distributed publicly and on what particular time horizon? So all of these questions were ironed out through the roundtable discussion. I think that just put us in a very strong position when we launched the platform a couple of weeks ago.
Because that sort of you know, real founders' frustration has been about the sort of institutional procurement processes that people have got, and it never ceases to amaze me that people are surprised about this when they come through and think they're being hard done by. But we know there's a process, and again, you know, probably going back to that product background of everything you said, it's like let's get ahead of every single problem. Let's make sure we've got answers to all the questions that need to be answered, which eases the process. And I think the more you can, you know, lubricate that process from a procurement basis, the easier it is to do that. And I think, you know, from what you were telling me beforehand, the last 6 to 9 months of you has been a really successful period of onboarding to get ready for this launch. Is that fair to say?
I think, yeah, for sure. I think a couple of points to mention. I think, you know, this is exactly my background. So, you know, it was no shock to me that it could take 6 to 12 months to onboard a large asset manager. So that wasn't a surprise, which helps. And I think, you know, maybe going back to our earlier conversation around, you know, being a startup founder, this is something that, and I think maybe a lot of startup founders say this, but this is something that is very, very personal to me. It's something that I have really wanted to do from secondary school. So starting a business is something I was always going to do. It's a very personal endeavor. And I think having that, I don't know, having that additional drive or motivation, something sort of, you know, deep within yourself that, you know, is very, very personal, you know, makes it easier to keep going for sure when you might be 9 months into a contract negotiation, and you're sort of tempted to give up.
Flip the laptop, walk away.
Yeah, for sure. So yeah, it's a very sort of personal endeavor to me.
And so I find that fascinating. So to know it that early that this is the sort of destiny for you is great. But I think it's also got to be about, you know, when you're founding, it's got to be about passion for the problem you're solving. And you highlighted that beforehand, that there's 2 major issues: the lack of transparency in that bond market, and the high cost of market data out in there. Talk to us about the impact that's having on the marketplace at the moment.
So lack of transparency, increased market data costs is clearly a massive problem, especially for the buy side. And it's quite nice actually pitching these problems to the buy side, because you get such an animated response when you talk about how much they are paying to access various data packages today. So it's nice when you get such an animated response when you raise these points. It sort of solidifies the fact that these really are serious problems that the buy side are facing. So I mean, this has impacts certainly on the institutional investor, insofar as they don't have access to the most basic of transaction data to, you know, understand what's happening in the market. to source liquidity, to demonstrate best execution, and for the portfolio managers to have the necessary market color to, again, paint a picture of what's happening in the market. But I think more importantly, and this is important not to forget, is that this trickles down to the end investor. So, we're representing the real money asset managers, so pension funds, high market data costs, lack of transparency, ultimately, trickles down to the end investor in terms of, not necessarily achieving the best outcome for the end investor. So when we talk about, bringing more transparency to the market, giving the buy side access to a high quality source of transaction data, it's such that they can guarantee the best outcome for their end investor, for the pension holder. So it's important to recognize that as well. And the frustration we get, another complaint we get from the buy side as well, is that they feel like they're paying to buy back their own data. And this is something that's come up again and again. So by and large, the buy side will trade their bonds on one of 3 big execution venues, and then they need to pay to buy back that data from various data vendors. So our platform is different insofar as our data comes directly from the buy side, so they no longer encounter that problem of paying to buy back their own data, which is something they complain about quite a bit with us.
And it's been one of those sort of archaic sort of areas, isn't it? Market data, for a long time. It's I don't think anyone probably put it top of the sexy list in terms of areas to look at, but it remains sort of so fundamental. It's kind of one of those areas to me that sort of sits in that if it ain't broke, don't fix it sort of mold, which I think is always one of the most dangerous areas to sit, right? Because it just means nothing changes, and if nothing changes, nothing evolves, and you end up falling behind. To me, this is what you're talking about here is solving something that just could quite easily just be as I say, a thorn in the side of the industry, and actually shaking it off allows can unshackle a whole lot of innovation and positivity, and particularly for what you talk about there, for that end user and that investor who's going to sit there. And I think when people are looking at this and they're thinking of what's important over the next couple of years, it's how can we make ourselves as usable, as friction free, and as attractive in terms of user experience as possible. And I think that's got to be alongside optimization, productivity, and efficiency. I think that's got to be at the core as digitalisation sweeps through the industry.
It's a difficult problem to solve, and that's why it's been such a long-standing problem. Obviously, there's been a lot of talk in the industry around consolidated tapes, and that's a discussion that's been ongoing for the best part of a decade now. And we are totally supportive of any initiative that aims to bring more transparency, reduce data costs, and democratize access to data for all market participants. So we're very supportive of that project, but it is a difficult problem to solve. That's why we've been tackling it for so long. But even if you look at the numbers around market data, so I think somewhere in the region of $35 billion was spent last year alone on market data. There was an article published, I think about 2 months ago now, by AFME, talking about how the cost of fixed income market data has risen by about 50% over the last 5 years. So clearly this is a big, long-standing problem, and one that's only going in the wrong direction. Yeah. And the problem is it creates massive data asymmetries in the market between those who can afford to buy these expensive data packages and really everybody else. So I think it's important that all investors should have access to a high quality source of market data, because it's, as I've mentioned, there are benefits to be seen by the end investor.
As any sort of democratizing comes in, you're gonna have that sort of, I guess, pushback from the powerful beings that sort of it doesn't suit to get that with exactly what what you said in mind. So as you're sat there with people having an advantage from having a increased cost of market data, and those people usually having some power in industry to stop this sort of thing. How does that? Why doesn't that happen? How can we look at this and think that there's the appetite from people to change the game in that, rather than to be led by the all powerful?
Well,
if that makes sense, I don't know if I've explained that in the best possible way.
So I think when you're doing something different and a bit disruptive, it's natural that you might get some incumbents who are reluctant to necessarily embrace that change, and that's fine. That's to be expected. I think maybe structurally where we have an advantage is that if you think historically where market data is generated from, it typically tends to come from trading platforms or exchanges or from the sell side. Our solution is different insofar as our data is coming directly from the buy side, so from the asset managers. So we don't have a reliance on receiving data from any of the incumbents for our platform to be successful. Our data is coming from a new source, and from a segment of the market who are feeling this problem the most and are incentivized to see something like this succeed, because it'll have benefits in terms of transparency, cost, etc., etc. So I think our model is structurally different from the status quo, and for that reason, I think we've been able to make good progress in so far.
I think it's interesting that, as you say, you come at from it from a slightly different angle. As you know, we've spoken about this before. There's been a couple of conversations we've had on this show where we talked about consolidated tape, and I was interested in your comments before coming on air, where we talked about the potential collaboration as opposed to competition within that to solve a problem collectively. How do you think that looks?
Yeah, I may have said it before, but I think just to re-emphasize, we're very supportive of any initiative that aims to bring more transparency, reduce data costs for market participants. And we think that's more transparency is good for the market. It's good for promoting healthy market structure. More competition is needed in the market for sure. We're really supportive of any initiative that aims to address those problems. And ultimately, I don't think it's a winner take all solution here. Market participants, I believe, ultimately want access to multiple high quality data sources at a fair price. So I think there's plenty of room here for multiple initiatives to be successful.
And I think that you coming from that sort of slightly different angle at a problem is only a good thing, to be chipping away at that framework to make something collectively bigger for the industry, which as we know can be a game changer, particularly when we look at what we can expect to see on a macroeconomic basis over the next couple of years. This is all about I guess not just marginal gains, but significant gains that are able to happen in the marketplace. Full stop. With regards to we've looked at the problem, and I think it's a fairly well trod problem. We know that you've come in there with your solution and added some real value already quickly to it. You launched a little over a month ago, probably 2 months by the time this comes out. Tell us so far about what you've seen and how it's gone down, and what some of the use cases, the feedback's been so far from your customers.
Well, where are we now? We're sort of start of July, and we've got about a dozen asset managers signed up to the service so far. We launched a couple of weeks ago now, so we now have a group of asset managers sharing execution data with one another at zero cost. Feedback so far has been really positive, and while it's still only early days for the platform, and obviously we need to achieve scale in order for Glimpse to be successful in the long term, I think the early signs are really encouraging. In terms of the data we've collected in the first couple of weeks, we have about 3,500 unique licenses that have been traded and shared on the platform. About 45% of the trades shared on the platform are above €1 million in size, and we've got somewhere between a sort of 70% is sort of European credit, 30% emerging markets. And I think it's worth reiterating as well that our participants share everything that they trade on our platform. So electronically executed trades via the big execution platforms, but also the off-venue trades, so the voice trades, the stuff that's negotiated off-venue via like an IB chat or a VCon. The really, I think, the most interesting data, the large trades, the illiquid, the high yield stuff that is not necessarily always traded on the venue, but is shared on our platform as well. So I think people have certainly been encouraged by the sort of quality of the information that's flowing across that. So a positive step in the right direction, but still plenty of work to do. Like I said, something like Glimpse will only be successful if we can reach scale. So we certainly want to double the number of asset managers we have sharing data on the platform before the end of the year, and take it forward next year as well.
And who is it who should be speaking to you when you're looking at these sort of things? Who's the right company, the right people to be talking to you right now?
So our target client base at the moment is real money asset managers. So pension funds, insurance companies, private banks, firms of that nature. We typically speak to the execution desk or the portfolio managers, or sometimes the risk management teams. So they would be our sort of, I guess, target clients in terms of contributing data to the platform. But we're very open and transparent as an organization, happy to speak to really anybody who might have an interest in what we're doing, because something like this is going to evolve in the years to come, beyond just the real money asset managers who are our current client base.
Some exciting stuff around that as well. And speaking of excitement, tell me how much you're loving it. It must be a great feeling at the moment.
I suppose it's been a lot of hard work. I probably have a hard time celebrating success. Probably not the most.
I think that's another founder trait, right?
I mean, there's always more work to do. So while it's definitely a positive step in the right direction, and I'm satisfied that we've delivered on the promises that we've made to our clients over the last sort of year or two. There's still a lot of work to do. And like I said, our focus now is onboarding more asset managers, getting the message out there, and growing the network. Because the larger the network is, the more data we will have moving across that network, and the more valuable it's ultimately going to be to our underlying clients. So yeah, it's been great. I've celebrated with a couple of beers following the go live, but
now we're back to it.
Now we're back to it. Plenty more work to do.
Absolutely. And we're talking about that. What does that look like? Tell me about what the you've been through the phases. You've had a year to 18 months of roundtables, and I've got full respect for that. I just think I say, I reiterate it. I think just that sort of genuine research is so rare to see, and so positive to see at the same sort of time to do that. You've had the 9 months of onboarding and winning that out, and now we're live. What's the next phase? What can we expect to see from Glimpse over the next year or so?
So I think there's probably two aspects to that. One is building the buy side pipeline, onboarding, and getting through the legals and onboarding and compliance with the buy side that we currently have in our pipeline. And then I think a second aspect of that is vendor engagement. So ultimately, the buy side want to see this transaction data available, in their existing systems. So in their order management systems, execution management systems, their TCA systems. So there's a technical job to do as well in terms of vendor integration. So that'll be keeping us busy for the remainder of the year as well.
Sounds exciting. And if people are listening to this and want to get in touch with you, Paul, what's the best way of doing that?
They can drop me an email, paul.o'brien@glimpsemarkets.com. And we're fairly active on LinkedIn as well. And we've redesigned
some good stuff coming out on that as well. I think you've got credit to you guys, because I think it's been some really caught my eye. I think there's been some really interesting stuff that you've been putting out there, and it's really good to see. I'm a big fan of the work that you're doing into that arena as well. Well worth looking at.
Appreciate that. And we've also redesigned our website as well, and it's much more information rich than our previous website. So, you know, if you're interested in finding out more, you can go to glimpsemarkets.com as well, and there's some interesting reading on there.
Fantastic. I'm going to close with one last question, and it's one which I always like asking to people in your shoes. That two years in, and going strong, going great guns. What's for someone who's just starting that journey, for someone who's just getting into it now, and starting up businesses, of which I know there are plenty. Whenever there's changes in the markets like this now, there's companies that are forged. So I always love the fact that there's so many companies that came out of 2008 and started at that sort of stage that are now household names because of the market. 2001 exactly the same. If we look at where markets are at the moment, 2020 and starting in a pandemic, you had some challenges around that, and you've risen to them in an outstanding manner. If you're sat there and there's someone else who's about to kick off a business at the moment in financial technology, changing the world, what's a bit of advice you give them?
Well, that's a tough one. I
didn't even prep you for it as well, so I love that.
I think ultimately it's important to have empathy for the client you're planning to serve, putting yourself in their feet and understanding what their problems are and what sort of solution is going to be appealing. I think the best way to understand your client's needs are to speak to them as much as you possibly can. I think especially in this age of technological innovation, it's all too easy to rely on emails and WhatsApp messages and LinkedIn messages. There's no substitute for picking up the phone, cold calling some people if need be, meeting people face to face. And you can never do too much of that. I would say Glimpse wouldn't be here today if it wasn't for the feedback I received, the candid feedback I received in the early days from some of our buy side supporters. So I mean, I would just say get out, speak to people, understand your clients' needs, and then a solution will sort of make itself visible to you.
I think what's really important about what you just said there is listening and getting candid feedback, because I think there's a lot of people who have to be the smartest person in the room when they do that, and they look for feedback, but realistically it's just telling people what their product does and how it's going to change their world without actually listening to it. I think the important part, what you've just said, is saying, right, here's the idea, help us create it. And I couldn't be more pleased about what you just said, because I've just actually come out of the meeting just beforehand talking to one of our guys here on a same level. I think this is again the time of building relationships, being with people. I think we've squirreled ourselves away for a couple of years as a world for obvious reasons, but I think that sort of ability to really spend time understanding, walking in the shoes, empathizing with the customers' issues. That to me is the real game changer. So I'm so pleased you shared that with us, Paul.
I think ideas are easy. It's the execution that's difficult. So understanding in a great level of detail what the problems are and working with your clients to solve those problems. That takes time.
Yeah, absolutely. Well, look, listen, there's an absolute gem to leave people with today. It's been an utter pleasure having you on the show. So pleased that things are going well. Really excited to see where you continue to take things. I'm sure we're going to be hearing a lot more, and welcome you back on to keep talking about the progress of the business in the years to come. But Paul, an absolute pleasure having you on the show today. Thanks ever so much.
And I really appreciate you reaching out and taking the time to host us. It's a big help for a startup like us. So very much appreciated.
Not at all. We love doing it and love sharing good stories. When there's problems in the marketplace and people coming up and providing solutions to it, we love sharing and shouting the message loud and wide. So great having you on the show. And thank you all for watching. We will see you soon on our episode of FinTech Focus TV. Thanks a lot. Bye now.